Welcome to episode 2 of the BAPS Campus podcast. Today's episode focus will be finance. Specifically, will emerging markets lead over developed markets in 2021? Our host today will be Tarun Bhai Odedra, who is studying politics, philosophy, and economics at Durham University. We are very fortunate to have two wizards of the finance industry with us today. Sandeep, having graduated from UCL, has worked his way through the industry over the past 12 years and now finds himself working at a capital debt markets team. We are also very fortunate to have Ketan, a Bristol graduate who found his start in finance on a trading desk, but has since moved towards business management and equities trading.
As you can see, there's two very great guests to discuss the following topic. So, will emerging markets lead over developed markets in 2021? Now, last year, it was dominated by US tech giants like Tesla, Amazon, Apple, and you had the S&P growing by 16.3%. Many investors, both institutional and private, have missed this rally in emerging markets. Now, the Morgan Stanley Capital International Gauge, which is a fund that measures the growth in emerging equities, increased by 23% since 2020. So Ketan, what are your thoughts? Why do you think the focus has remained on developed markets as opposed to emerging throughout the pandemic? And following from this, do you think investor portfolios will reflect this growth with sort of more and more people moving into positions within emerging markets?
Thanks for the question. So when it comes to investments, there's many different things you have to consider, all centered around risk, right? So when you're talking about emerging markets versus developed markets, the kind of three big risk factors you should be thinking about are liquidity, transparency, and volatility. So for emerging markets, you've the kind of either the equities, the stocks, the bonds, whatever asset class you want to talk about, it's a lot less liquid. And by liquid, I mean it's a lot harder to buy and sell without incurring large transaction costs, purely because there's less buyers and sellers of those kind of products. Secondly, transparency. So when you're talking about a stock like Tesla or Apple, right, everyone knows the company, you can get the financial records, there's thousands of research reports on these kinds of stocks. When you're trying to think about a miner in Brazil, right, where you've got a different government that maybe changes, you've got kind of volatility in the political regime, even the company themselves don't publish all their data, it's very hard to get comfort with what you're investing in, right? So that's the second risk factor. The third one is volatility. So given these kind of EM is a lot more illiquid, a lot less transparent, you're going to have a lot more movements in the prices of the asset class you're talking about, whether it be stocks, whether it be bonds, which brings about more risk. So the key thing to think about on EM versus DM is it's a lot more risky, right? Whatever way you look at it, which is why generally when you have any sort of crisis, whether it be the financial crisis in 2008 or right now, the kind of healthcare crisis, people always steer more towards developed markets as opposed to emerging markets, purely because of the risk factors. Now, obviously, that kind of brings about opportunity, as you're kind of alluding to in your question, where if you do have that risk appetite, so you're willing to take that risk and you do the necessary homework, you can find more opportunity in emerging markets versus developed markets. And to be fair, that's kind of what the smart money has been doing since there's been talk of vaccines, right? And the fact that there can be a vaccine, which is kind of 4 or 5 months ago. And so you've seen a shift initially from the kind of hedge fund space into EM over the last 6 months. That's gradually going to work its way towards the kind of more asset manager client base and eventually towards retail. But remember, retail are always the last of the party. So yes, you're right in the fact that it's been overlooked purely because of the risk. But you will see probably this year more and more money moving towards emerging markets as developed markets they kind of reach a saturation point.
Yeah, just on that, if I can add, if that's okay, Darren, I think if you look at the equity indices year to date, we've seen the Nasdaq up around 9%. The S&P is around up 5%. But then you look at Asia, like the Nikkei or the Hang Seng, and that's up again about 5 to 10%. So it's roughly been in line. But I agree with you, the EMs has outperformed. What I would say is that when you see the movement in the dollar treasury rate, the long-term dollar treasury rate, which is a bit of a sign of the economic health, the 10-year rate, that's nudged up towards 3% now, and that's going to impact the price of the dollar. And as the dollar goes up, emerging market economies, which are more reliant on exports, there's a theory that could impact their economies. So, not to say it's unprecedented, but about 2 months ago, the treasury yield hit 3%, and there wasn't that much of a change as the inflows into emerging market space continued to go up. But at that time, the dollar didn't strengthen. This time, as it's just hit 3%, the dollar has strengthened. So again, there's a theory as to say that with the strengthening of the dollar, the emerging market countries, the export businesses effectively might suffer as a result. So let's see. I mean, look, ultimately, COVID's such a massive play over here, and it's still a long way to go before all of this is sorted. So I kind of agree with Ketan by here on the wider aspect.
And you actually touched on a good point around the dollar, right? Because a lot of the debt denominated in emerging markets is dollar based. And so, as Sandeep said, as dollar gets stronger, these guys have to service debt in dollars, and it becomes a lot harder to do. So dollar strengthening is not a good thing for EM. So yeah, if the view is that's going to happen this year, it's even more risk.
Right. So yeah, that's a really interesting response. And Sandeep, you touched upon exporting countries being affected quite majorly by the dollar. And when we're considering this sort of emerging market revolution, we turn to arguably the largest exporter, China, right? So they've benefited from a speedy recovery. They're currently operating at pre-COVID GDP levels. But we all know the country isn't without fault. So these risks can include a turn in China's credit impulse, which is the 12-month change in lending as a percentage of GDP. And when we look further into 2021, we're seeing a sort of withdrawal of monetary stimulus by central banks. So can we see this as a sort of wrench in the wheel in terms of this growth that we're experiencing in emerging markets, or what are your thoughts on that?
Yeah, it's an interesting question. I don't particularly think it's going to be a massive, like you say, a wrench in the wheel per se. I think the wider issue, as I mentioned previously, is going to be where the treasury rate moves to and the impact of the dollar price itself. I think the impact of the dollar price is probably by far and away the largest external factor that impacts EM growth. Naturally, as you said, most of these countries are exporting countries. They rely on demand from importing countries as well. And COVID is also one of the biggest drivers, right? What we have to understand is that, yes, look, China's doing really well in terms of recovery, but EM world is not just China. So there's been a slew, like an absolute barrage of economic data from countries like South Korea, Poland, Mexico, all EM countries. It came out this week, actually, and there's further evidence that, there's increasing damage from this pandemic. I mean, excluding China, emerging market activities fell about 77% below pre-virus levels in the third week of January, right? So everyone's saying there's this recovery occurring, it's being amazing, but actually we're still 77% below where we were last year. And, yes, look, versus compared to last year, you expect us to be below, but almost 3/4 below that. And that's still driven by, the pandemic is still strong in some emerging market countries. So yes, look, there's a wrench in the wheel in terms of the withdrawing of monetary stimuluses provided by central governments, and kind of this kind of other aspects occurring. But I still think ultimately it's when the virus itself is removed, either through a vaccine or other methods, that we'll start to see the EM growth occur again.
Great. So leading on from my previous question, we've seen many countries undergoing expansionary fiscal and monetary policies. Now, we can imagine in the coming years, governments are going to be heavy on taxation to combat these unprecedented debt levels. Now, how do you think investors are going to react to this? Do you think there'll be any particular sort of movements by investors, any markets they'll look to, for example, ETFs that are very efficient on tax? Ketan, what are your sort of thoughts on using?
So when it comes to thinking about how governments are going to handle the debt burden, you're right. Tax is obviously the easy thing governments will look to do at some point. When you talk about, there's two ways you can kind of take advantage of this. First of all, how governments affect tax policy, and then how that affect the stock markets and bond markets. And then secondly, from a personal perspective, how can you use the tax benefits out there to inform your investment choice? So you break it up into two. We talk about policy first. So US is the driver of the world, as as kind of we all know, especially in terms of stock markets. So clearly, Trump, reduced taxes wherever we could, personal corporation. You would expect Biden to at least increase corporation tax at some point. To be fair, that's still a way off in my view, considering that they're planning, billions of further stimulus in the short term. But if that tax does come into effect and corporation tax increases, you should see a reversal of the kind of whatever it was 30-40% increase in the stock market, kind of due to the reduction in corporation tax kind of reversed, right? If and when that happens, and that will obviously affect US stock performance. If that translates to higher income taxes, that in general will reduce demand across the board for goods, for services, and therefore company revenues, right? So tax is never really a good thing for stock markets in general, from kind of both hits corporation tax and income tax. I would say from a personal perspective, I kind of look to someone like Warren Buffett when it comes to how to make the most out of the tax system. What he does is buy and hold. So if you never sell your stocks and kind of lock in your gain, you never pay that tax, right, on the capital gains tax on your investments. So that's kind of one extreme where you just buy and hold, especially if you're young, right? You've got kind of a 30-40 year investment horizon. You buy the stocks or the bonds or whatever you like, you hold to maturity, you're probably guaranteed to make a good return over the long-term horizons, as you've seen over any stock index you look at over the past kind of 50, 100 years. The other thing you can do is start creating a pension, and even especially if you're working, kind of just lock away a bit of money each month or each year in a pension, and use that, as I do, as an equity portfolio. And that way you can kind of learn the skills of how you manage a portfolio of stocks. You kind of do your own research, and you can buy and sell within your pension, all tax-free. And because it's locked away, you can't touch that kind of whatever for 30, 40, 50 years. And it's a good way to kind of lock in those longer term returns.
Yeah, I think adding to what Ketan said, I personally wouldn't go with a pension aspect. Probably just difference of opinion. I think that's going to be subject to 30, 40, 50 years. Who knows whether the government then starts to tax pensions. But I think at the moment, Ketan is right. Personally, what I would do, I'd probably go with an ISA. So you can invest up to 20 grand tax-free into an investment ISA, and over, as Ketan said, 10, 15, 20 years, you can keep putting in your 20 grand limit, or when they increase it, you put in the limit amount, and then you can trade stocks, ETFs, all of that stuff tax-free, right? Any gains you make, even if you buy and sell, it's all tax-free because it's within the ISA. So I would probably prefer that, and that's a nice way of being very regimented, of trying to put your 10, 15 grand or whatever you can afford into your ISA every year. And again, it's a nice way to build up your portfolio. In terms of the debt question that Tarun, you may have asked, how are governments going to be able to deal with the debt and tax? I think what the theory that most governments are going with is that by providing so much stimulus, so much monetary help, they're trying to get inflation to kick in, right? So they're trying to get the inflation, which is quite low at the moment, they want inflation to increase. When inflation increases, remember your debt value decreases. So if you've got £1 of debt today, if the inflation in 2 years' time, that may make the £1 of debt worth 80p in the future. So your debt's already gone down by 20% because of inflation. The value of money in the future's caused your debt to go down. So that's one method that they're trying to do, just inflate the debt away, right? Or reduce the nominal value of the debt, reduce the real value of the debt due to inflation. The other aspect is like, how can they afford so much debt? That's easy because remember, if you guys have got a mortgage, okay, say you've got a mortgage on £200,000, you don't have to pay the £200,000 straight away, right? That's in 30 years' time. So the important thing is, can you afford the interest? That's just your year-on-year cost, the interest payment. And if your interest payment is affordable, then it doesn't matter. Then you can issue as much debt as possible. So because interest rates are so low historically, governments have taken a view that, okay, as long as my interest payment is below my GDP, or I can afford my interest payment, then I can issue more and more and more. Okay. And then from a tax perspective, yeah, look, Ketan is right. They're probably going to start reversing or increasing tax in ways that other ways they can do it. I mean, look, these are kind of left field theories. They can obviously reduce spending on other aspects in the government. Obviously, they're going to increase spending on healthcare, but they can reduce spending on, say, the military aspect, right? A 10% decrease in military spending across governments globally is a huge amount. Also, I think they're going to start attacking tax havens. A lot of super wealthy individuals have set up tax havens in places like Malta, places like other countries. And there's been a study that showed that costs people around 4.4 trillion annually in terms of tax revenues. So that's another way. If that's a coordinated effort across governments, that could be a good way to kind of increase the tax revenue, pay down the debt without affecting, say, the common man on the street.
Right. So far in the podcast, we've had quite a commercial awareness sort of theme, but I just want to sort of zoom out and consider the wider picture. These questions are going to be more personal, and they're going to be really useful for some of the Kishores and Kishoris out there that are listening to this. So you've both been heavily involved in finance. You've progressed very well through your careers. But one thing that both of you have maintained is your satsang. And I think a lot of people out there find that very admirable. So I guess my question to you is, how do you strike this balance between satsang, a personal life, but then also work?
Yeah, I guess I can take that one first. I think the key thing is when you go into it is you've got to realize what's important to you, and realize that satsang has to come first, right? Look, your career is super important, and you have to focus on it. You have to work hard to get there. You have to work hard whilst you're in it, keep progressing. Front office investment banking, like, Ketan by myself and many others, across, the Sanstha do, it's just taxing on the hours, right? You're in at, depending on what area you're in, you're probably in quite early, 7, 8, 9. And you're working 12, 13, 14 hour days. If you're an M&A or private equity, you're probably working longer. So, let's say on average, it's, 8 till 10 p.m., 8 a.m. to 10 p.m., right? You're working. Then in the middle of that, you've got to, that's your commute. At the moment, we're all working from home, but normally you would have to commute, say an hour and back and forth. So where does that leave space to do any satsang? The answer to that is you will find time. You will find pockets of time, and then it's up to you to prioritize what you think is important. And I guess for me, I always try to prioritize satsang. So if I did have a spare moment at work, I try and do some seva. Always try to do my anik. So reading the Vachamrut, reading the Swaminarayan on the commute home, doing arti in the morning, doing arti in the evening. If it's 7 o'clock, just take a pause, just sing the arti quickly in your head, or, go somewhere, listen to it. Gatha is important. So on the commute there and back, 20 minutes each way or half an hour a day, just listen to some kata. Those kind of small things. And then, what you have to understand is, okay, is going through social media that important to me in the morning or in the evening? No, such thing is. I think another main thing is obviously trying to attend sabha where you can. Obviously, that's super important. You get your katai and you go to mandir, you get the right sung, you keep on the straight and narrow. I think those are the main things to consider. It sounds very simple, very basic. Just do your anik as regularly as you can and try to attend sabha and listen to kata as regularly as you can, and you should be okay. Those are the fundamentals of satsang, and as long as you're prioritizing those, ahead of other things like social media or going out with friends or whatever it is, then you should be okay. I don't know, Ketan, what do you think?
Yeah, you basically hit the nail on the head. I say sung is the key kind of good thing you'll come across, right, when you start any kind of work, especially in investment banking. So as long as you're aware of that and you kind of counteract that by doing the kind of positives that Sandeep I mentioned, then you will be fine. I mean, I know personally when I started my career, I didn't do diligent. I wasn't really a strong studying in any way, shape or form. But then when I kind of midway through, when I changed jobs, I started to do diligent. I started to get more involved in studying, and trust me, by doing studying, by knowing that that's kind of the main focus in life. Obviously, you've got your career and your family, all of that stuff which goes with it, but in the true essence, right, when it comes to life and death, the key thing, is to please Maharaj Swami. That kind of one thought will get you through any kind of ups and downs you have within your career, as well as any, not just career, but especially in your career, and will keep you on that path. And the times of, as a trader, you get heavy stress, right? And probably more so than any other kind of job where I remember 1 week I lost $1.5 million in a week, right? and that was
pocket money.
That wiped my P&L to zero, right, after 6 months of hard work. And then back then I wasn't as strong as studying it, right? So I was just in meltdown mode, mate. I went to pizza and I was like, I don't want to eat the pizza. But yeah, having studying in those moments, right, they get you through. You guys know it's all about understanding what's true. Everything happens for a reason. All these things that the Santhas keep telling you, it all comes to play when you have these moments in your career. And so without studying, even if you're in the best job in the world, you won't feel that. You won't feel happy. And when moments turn, and they always do in any career you have, you'll feel it really hard to kind of get yourself up. So satsang, it just keeps you on point.
100%, 100% agree with you. I think, there's been times where I've been at the office at 2 a.m., 3 a.m. in the morning on a Friday evening, right? And I've been working super long hours, and I think to myself, what am I doing here? I've missed out on, family birthdays, my friends have, maybe met up to watch the football or something, and I've had to skip all of that for 12 years almost. But then you realize, as Ketan mentioned, it's all for a reason. Maharaj and Swami have put me here, and it's up to me to work hard to gain the Rajapur, right? You see it as a seva, right? Reason I've got the job is because of Maharaj and Swami, simple, because of Mandir, because of seva. Yeah, I did some hard work, but it's Maharaj and Swami putting us there. Other thing that may help, I don't know, Ketan if you agrees, is to give your dharmado. It's difficult, mate, it's difficult, right? That 10%, it sounds like a small number, but then when you actually got to hand that check over, or the, whatever, the payment over, it can be a bit tricky, but continuing to give dharmado, it will help put things into perspective. And ultimately, that is a sign of your acceptance and realization that the reason we've got the job and the reason we're doing well is because of Maharaj and Swami. So it's only fair to give back, for the reasons that, they've been so grateful and gracious to give us this, the opportunity we have.
Definitely.
Totally agree.
From what it seems like, it's we've had shivers on this as well. Satsang is a lifeline, right? So for like Ketan said, when work got stressful, loads of people without satsang would turn to other things to sort of relieve that stress. And we're so lucky we've got something, I think, so pure to help us sort of get our mind and sort of relax ourselves in a working environment, which is essential.
100%. Did you know, I think you'll be shocked to see how high the divorce rates are in these kind of jobs, right? And why is that? Because, people can't handle the stress and they take it out in other methods, and it impacts their family life, impacts the personal life. You have satsang, it grounds you and it will keep you, steady for the rest of your life, basically.
Yes, exactly. This is really, it's so essential. I guess that's the only conclusion you can draw from your remarks there. So just to round off this podcast, I want to ask you guys, what would you recommend to any Gishors or Gishoris out there that are looking to pursue a career in finance? Is there a sort of formula to success? What did you guys do to get to where you are right now?
I think to start off, so we talked about the satsang, which is obviously, we know our thoughts on that. In terms of getting into a career in finance, the most important thing is to start early, in my view, especially now where jobs are few and far between. The earlier you start, the earlier you know what area in finance, because finance is so vast, what area you want to go into. You try and get that work experience. You try and get that, first year spring week or internship, that second year summer internship, and then you get that grad scheme, and then you're sorted. I think it's very hard if you don't get in early to try and get in once you've graduated. It's kind of near impossible now, right? All the grads are now from your kind of these kind of internships. Yeah,
agreed. Yeah, that's exactly it. And trying to do anything extra you can do in your spare time. Try not to be lazy. Read up on, read finance articles, ft.com. You can get a student subscription. It's significantly cheaper than it was if you pay full price. If you don't understand the articles or some words, just Google them. It's very easy. You got sites like Investopedia that can help explain things. If I was saying from a future perspective, if you've got a spare summer holiday, maybe try and learn some coding. That's always helpful if you're trying to, do some invest or trying to go into finance, learning things like Python. There's tutorials online. Just, if you want to watch YouTube, learn about options, learn about shares, there's enough people giving tutorials and walkthroughs online on different aspects of finance, for sure. In terms of the advice I would give, similar to Ketan, by just try and go early and be dedicated to it. Whoever you are, whatever background, whether you're public school, private school, state school, male, female, whatever it is, don't ever underestimate yourself and what you can do. Just really dedicate. If you've got a goal set in your mind, just go for it. And I think what you'll find is that once you have a really set goal in your mind, you will make decisions consciously yourself, right, to achieve that goal. It's not that classic. It's that classic saying that people used to say, like, when we used to do Koshti, obviously us Kishores, we love football. So if someone said to me, Sandeep, I would offer you, Arsenal are going to offer you a professional football contract to play for them, but you can't eat out, you can't eat onion and garlic, you have to go to Sabah every week, you have to do X, Y, and Z. Would you do it? Hell yeah, that, without even thinking, you drop everything, right? This is playing for your dream club, your fan club. In a similar way, when you have something dedicated in your mind, okay, I want to go into a career in finance, you'll start finding yourself doing things like reading articles, as Ketan says, getting things involved early, trying to upskill yourself. So learning Python, for example, or other coding languages, to try and get there. Just, whoever it is, don't ever underestimate yourself and your capacity to achieve something, especially when we've got Maharaj and Swami behind us, right? So
definitely.
That's a key point on confidence. And I said this in one of these Kishore conferences you guys had, where people always doubt themselves, especially from satsang, that they're not as clever, or we haven't got the right background, we're not from a private school, all that kind of stuff. If you think about it, right, all of us have the ultimate Ganam, right, Brahma Vidya, which all these guys out there, right, guys and girls, have got no clue about. And it's the hardest thing, if you think about it genuinely, it's the hardest thing to understand or even to get that knowledge, right? So you are way above any of your peers at school, the workplace, or whatever it is, right? You are up there, right? Because next stop is Aksharam. So you need to have that confidence that no one is kind of better than you and all that kind of stuff. You've got all the power that Maharaj and Swami have given you. You can do anything you want. The key thing is, Sandeep said, is have that focus, right, to please your Maharaj and Swami and to get that career, right, with Maharaj and Swami's help. But, and this is a but, it's to get that right, to have the right focus and know exactly what job you want to do is really hard, especially if you haven't got someone in your family who's in that field, or you don't know anyone from under it. So this is why and this is what Jay Button guys have created this kind of that Gishamon education group, where they've connected all of us Yuvaks right across and Yuvaks across the different fields and all the jobs. You reach out to the Gishamon education team, Gishamon education team, and understand more about whatever sector you want to go into, right? And I said in finance, there's thousands of jobs and they're so different, right? It's so many subsectors. Talk to as many people as possible, find out what is your passion, what you really want to go into. And it's not just about the money, because as Sandeep said, you can go to M&A and work basically 100 hours a week and have no life. Some people like that, but some people want to have some sort of balance. And so speak to as many people as you can, understand that specific path you want to go into in whatever field, and then you can kind of focus on that. But until you find that right path, that you can't focus, right? So speak to people, as many people as you can.
Yeah, for sure. I'm so glad you touched upon the point of confidence, because that sort of logic can transfer through any field. So for anyone listening right now, it's you've given some very good generic advice that can be transferred, like I said, anywhere. So I just want to round this off by saying thank you to Ketan and Sandeep for taking this time out to speak to us and to give us this sort of invaluable information that a lot of people and a lot of Gishoris don't have access to. So again, thank you so much for taking this time out. And I hope all the listeners out there have gained some valuable information that they can use going forward. Jai Swaminarayan.
That concludes this week's podcast. We hope you've been able to take something meaningful away from this discussion. Jai Swaminarayan.